So a report is showing many families now spend in upwards of 40% of their joint income on taxes. So how do you keep more of your money? Joining us to discuss is Peter Sashecki from Everything Financial. Good morning, Peter. Good to see you.
Good morning.
That's the last thing people want to do is to spend more on taxes than they should. Sir, what are some ways that people can reduce their income taxes?
One of the best ways you can reduce income tax, obviously, is RRSPs we talk about. But the key part with RRSPs, and we talk about this in January, February all the time, is not buying too much RRSPs. So if you're in a 42% tax bracket, don't buy RRSPs till you get down to a 20% tax bracket. You think you're saving on tax? You're not, because you're going to spend the money when you spend retirement in a 20 to a 28% tax bracket. Get the maximum refund you can within your tax bracket. That's the easiest one, obviously, that everybody knows about, but there's many other ways to do it.
Okay, so can we use the example, though, of someone who is self-employed? What are some ways that they can possibly lower what they pay in taxes?
Yeah, self-employed people, a lot of them don't realize it's not a big stretch and not a big expense to become incorporated. So talk to your registered financial planner, get the team together of them, your accountant, your lawyer, and look at incorporating if it's applicable. You can save so much on taxes. You're talking like 12, 15% suddenly or more just by being incorporated. There are some expenses with being incorporated, but...
For example?
Well, you're going to have higher legal fees, higher accounting fees to, on a yearly basis, do your accounting. And setting up the incorporation costs a few $1,000s as well. But in the end, that's a small price to pay, if you're saving 20% in taxes. Say you're making $150,000 and suddenly you're saving about 20% every year. That's a huge savings in your pocket. And there's other advantages of leaving money in your corporation versus taking it out. So there's a whole trickle-down effect when you can incorporate versus being self-employed. Because self-employed gives you the access to write-offs and stuff, but you're still taking out normal personal income.
Indeed. Okay, what about someone who's a full-time employee? What's the way that they can reduce their income tax?
Well, a full-time employee, and especially if you're one of the higher tax brackets, look at two things you should do. One is a mortgage deductible strategy. It's ways to make the interest on your mortgage tax deductible. It's a huge benefit that's been around now for 27 years. Most people don't even know it exists. There are specific rules that they're long and extensive, but they're easy to follow with the CRA website to make sure you're doing it the right way. And it's a way to pay down your house, but have what we call passive tax savings. So we talk about having rental income as passive income. Well, imagine doing what you're already doing, having your mortgage, except writing off a percentage of it, of the interest you pay, on your income tax. And every year that tax savings can be used to pay down more of your debt.
Wow.
So you definitely need some help doing it. But if you're in one of the higher tax brackets, that's definitely worth it.
Okay, and then for those who have investments, how can they save on their taxes?
Don't buy term deposits a lot of times.
Term deposits.
Yeah, GICs.
Okay.
Well,
right.
In a lot of cases, sometimes you have to, obviously, Carrie. But when you're looking at bigger investments in long-term savings, the thing with term deposits or GICs is the interest. The interest is 100% taxable. There's a much lower cost in taxes with dividends, capital gains from investment. So maybe you don't want to take on a lot of risk, and that's why you're buying. You think that's the smart reason to buy the GIC. But you can look at, with portfolio managers, very low-risk investment portfolios, but earning dividends and capital gains and not give away all the tax. And we know about the TFSA. So next week, we're going to talk about the 3 TFSA rule.
Oh, a little deep tease.
A teaser for next week. Yep.
Okay, looking forward to that. Just when I thought I knew everything, TFSA has come in, the 3 Ts. Peter, thanks for joining us this morning and helping us learn more about how we can reduce our taxes.
Great to be here.
Keeping more of our money. Sounds good.